Hey traders, GJ here. Welcome to the daily report or daily candle change, whatever it is. But hey, I'm really excited about some of the potential setups today. So let's get right into the charts. First, the housekeeping. We know that this video that you're watching is not about financial advice. If you want financial advice, you need to go to somebody that's qualified. By watching this video, you agree not to hold me responsibility for any of the thoughts or information shared in this video, and you take full responsibility for any decision making you make regarding your trading. I do not offer financial advice. As I've said, in this video is designed just for information and educational purposes. With that being said, let's get right into it. Not going to waste your time, but I'm going to have a look at CAD Swissy, Swiss JPY, Pound JPY. There's some setups happening there and a couple of New Zealand pairs. And I will leave the current trades that I have open. This video is my daily candle change strategy. Now, I'm very kind of close and private about letting you know when I get in and when I get out. So sometimes I drop when I'm getting in some the trades I do drop them into the chat box, okay? But I might not necessarily tell you when I'm out. I just forget about them and concentrate on what I'm doing. Most of the time when I say I'm out or I'm in is regarded to the Frankfurt London Opens. So I have two accounts. One is solely for daily candle change. So I'm going to give you a look at preview of some of my trades that I'm holding, because as I've said many times, most traders do not make money in the market. 90% of retail failures fail. At best, they stay around break even. If you want to get into the 10% of successful traders and make a living out of this, I'm going to be sharing you some, what I believe is some foundational truths that you can build your different strategies on. But without the foundational truths of how to go about it, you're always going to be struggling in my book. So here we go, for what it's worth. AUD CAD. Right now there's no setup. I'm not going to waste your time. AUD Swissy. There is potentially a setup here. What do I mean by that? We've been in an uptrend. We've come down and we got range bound a little bit. You can see the top and bottom of sideways movement. We call it consolidation. Once it comes back up, see, this was a fakie. Now, if you were trading smaller time frames, yeah, sure, you'd be able to make a bit. But this is where you make your big money on the Forex. These runs here, this is worth a lot of money. This here, you have to be in front of your computer. You have to be monitoring your day trades. You have to, I can't afford to do that. The only reason I trade Frankfurt and London is because it's a window when it suits my lifestyle to have a bit of action in terms of scalping and short-term trades. I'm a horse trader and I love the excitement. That is not my bread and butter. Daily candle change is my bread and butter. And look at this here. You catch this move. This is easy. Price action tells you that this is about to go up. And if you want to learn more about that, ask me in the chat. Otherwise, I won't tell you. But that's the move. And you get in, and every time it pulls back, you can add to it. And your first and second positions come off, and it's money in the bank to cover you while you hold it with a bigger stop loss to give it breathing room. This is the money, mate. This is easy. It's not easy to do, but it's hard to do, but it's easy to do. I know that sounds stupid, but listen, hey, you want to make money? Pips pays my bills. Pips pays my investments into land and all that sort of stuff. So, you know, the choice is simple really for me. So after days of consolidation here, and we get this staying inside, price action tells me that it's going to go north again, continuing the trend. Why? Because we have this big candle down here. We have it open and it shot down here, but it closed higher than it opened. And now we're looking at another attempt to go south that failed. This candle is an engulfing candle. It opens low and finishes higher than the high of the previous candle. That tells me we're going north. Now, it doesn't always work. There's more to it than that. That's where the entry was. So right now, the first position is still open on that entry. I took another one here because it broke key resistance. With that move, I got my first position and decided to take my second position off and held. This got stopped out a little bit more than break even. But this main big trade, the first position, was still open because I had the trailing stop still sitting in here waiting for this area of resistance to go. So we're in good shape. A couple of days ago, took it again here. Sitting at break even on the last trade that I added. And that's the way you do it, you know. So just to reiterate, here we go. Here was the original entry. We'll put that in green. I added again with the break of this key support. I got some nickels and dimes out of it, waited for the pullback because I didn't want to pull my stop loss. So my stop loss from this here was originally under here. I'm giving you keys that can change your trading around and make a difference in your life. Once we're up into here, I just pulled this first position of my original trade to break even, and I sit there knowing that this is a key resistance, and if I'm going to get a long trade, I've already got good money from my second and third positions. I've added again, got some nickel and dimes out of that, and it's pulled right back. I don't care if this is taken out because I've got good money in the bank from second and third positions. I'm after the long trade opportunities. That's what I'm after. I'm after the big money. The day trading and the short-term stuff and swing trade, whether you swing trade or not, you know, that's fine. I enjoy the scalping because I'm a horse trader. I like the short-term things, but I say that just for the window that I'm available to be able to do it properly, which is the Frankfurt, London. But this is my bread and butter. And we've talked about this before in the chat room, and I've done a few videos on it. So where are my profit targets for these trades now? I just go to the weekly to start off with, and I am looking for support and resistance areas. And I take the weekly chart as a really good, I'm looking for there now, because I've got my profits protected. So why not go for the next really strong area of resistance? And if you've got your existing trade from way down there you can't lose, why not push the potential profit target up into here? Some big, hairy dog, ludicrous target. Because I'm trailing, once I'm at break even from here, I decide once it's breaking the key resistance, which it has, I will trade at the average true range. So there's one trade you might like to look at. Aussie JPY. We're already in. We've been holding it. And here's an inverted head and shoulders. And you've got to be careful with this too, because it used to be a really good carry trade, but because of the low interest rates for the main currencies like the CAD, the US, the Aussie, the New Zealand, they're all very close, with the exception of the Euro, who's a little bit negative, and the Swiss that's negative, and the Yen that's a little bit negative. Now, sorry, the euro is neutral, okay? So there's not the strong carry trades coming off the commodity currencies at the moment. So you do have to treat this with care. But this is where we're at. I am looking to add to this trader again, because this is the key area of resistance, looking at the weekly. See where price reacted before? So I want my pending orders to be there, and we'll put a pending order in, because that's where my pending orders are on my trading platform. Now we come back to the daily and have a look. Tells a story, you see. We've got a way to go before I hit that. I'm okay. I can't lose this trade. I'm happy. That's the key area. I don't want to add in here. All right, Aussie USD. This is setting up again to go long. Now, you've heard me say that I am bullish on the US dollar. I need to qualify that statement. I am bullish in the short term. But I believe in the mid to long term, we're going to see likely at some point dollar weakness. I haven't got time to explain why I think that. But look at this. The Aussie is, you cannot deny, in an uptrend. There's the pullback. This trend, while the US dollar is still not reversed, is going to continue, in my opinion. That doesn't mean to say that I don't believe we're going to get a stronger US dollar in the short term. Go to the US dollar index. This has not reversed yet. Nowhere near it. If it does, see, I don't care what my analysis or anybody else's analysis is. You can be the best at whatever patterns, whatever way you trade. They all work to some degree. But if you haven't got a strong foundation, I believe, of support and resistance within your trading, you're doomed to failure. That's just my humble opinion. Doesn't make me right. And what I've said to you over and over again is this, that if you have an opinion about where the market's going and you analyze your charts, who am I to say that you are wrong or right? It's the market that decides whether you've got it right or not. And it's the market that tells you what direction to trade in. So let's go to the weekly. This is a weekly trend line here. We had some really good strength coming in the dollar couple of weeks ago. Then we've seen it drop back down. It looks like this level might be wanting to hold here. So my point is this: if this level holds in this range on the daily chart, there's a strong probability that the trends on the commodity currencies are still going to continue up. They're not reversed yet. Now, the potential is there for thousands and thousands of pips to be made. But here's the possibility. Look at the new. I'm sorry, I get really passionate about this because I really want to help traders, and I'm tired of traders getting ripped up by the so-called experts. Here's the reality. Keep an eye on those levels I just showed you. A close below these levels may well mean that we could get a move lower. If this happens, keep an eye on the US crosses. They're likely to continue to move up again. If the US dollar has another genuine move with momentum, you know, a move lower before it actually pulls up, pulls the bottom, and begins to strengthen, we've still got a bit of room to move in terms of the Aussie USD, Euro USD, and New Zealand CAD and other such currencies. So come back to the weekly. I'll show you this. In order for me to be confident that the dollar's turned, it's got to break the trend line on the monthly. Ooh, did I say the monthly? Yes, I did. And if this is truly going to form a bottom, this could take several weeks. And as long as this level holds, at some point it's going to be right, looking for the reversal on pairs like the Aussie USD. But at the moment, we're still have strengthened the Aussie dollar, the New Zealand dollar, the Euro USD, even the pound and the euro. Now, it may not equate out to big moves on the charts technically, but it's still there. So be careful. Aussie New Zealand on my watch notes. Here's my original entry. I'm still holding. I entered again. And I gave out, I'm reluctant to give trade calls because it doesn't actually teach you how to trade well. Copy trading, you need to find your niche in the market yourself. I got in again, just down in here. I didn't get stopped out. I'm still holding it, but this trade is in profit, and the profit's connected. This trade, originally when I got in, has moved 40 pips. I've got my first position off, and I'm only 10 pips from my second position. Where are my profit targets? Piece of cake. Here's a real resistance area here where price has been reacting in the past. For this trade here, that is my first profit target. The second one. So you get better support and resistance areas off weekly, but at least do daily. Here's another one that I like. Whether they get there or not is totally irrelevant once you're into break even and you have profit in the bank for your first and second. This is what it looks like a daily. Pretty good, huh? That's not a bad target. Here's the strong resistance that broke that got me into the trade. And when you have strong resistance and support, usually, not all the time, you cannot guarantee it, this will have a crack at maybe retesting this somewhat. And as you protect your profits, if it doesn't reach this target, you get stopped out. You still make plenty of good money. Now, if you have a look at the big picture, look at this. We started from the bottom. There's the first swing. There was a shallow one, pull back, and then there was that move. Now this move, then up. You see now, you wave fellas, what do you do with that? I'll tell you what you do with that. There's the high that it needed to break to make a higher high. There's the low, the higher low, but look, it came and it's made a lower low, but it's still higher than where it started. So all of this is just a swing. Forget about your Fibonacci levels. Forget about anything else. Learn to trade price action. It's not hard. It is hard, but it's not hard once you get it. And in the big picture, I believe this thing is still going up. At least in the short to mid-term. And it could be a long-term thing. There's a lot of money to be made here if you know how to trade it right. Okay, so let's take the big picture. First move up, this is just the swing here. Here's the swing. Not 1, 2. In my mind, I just see this. Here's the first move up. See, the market is telling me what's doing. There's the pullback before it makes the next move up. In my book, and support and resistance is the truth that'll set you free in terms of building your strategies on a firm foundation. I rest my case. Right, let's go to CAD Swissy, because that's a really good setup that I like, in my humble opinion. Oopsie, let's get out of here. I'm not apologizing for the length of the video today. If you're serious about your trading, this could radically turn you around and change some of these truths that I'm sharing with you today. Okay? Here we go. To me, I look at this chart, we've certainly got bottoms here. This looks to me like this is a bottom. A good bottom's formed now. So I'm looking at a break of the key resistance area. Here it is here. So you put your pending order in according to what you see based on your solid foundations of whatever you choose they might be. If they're not working, you need to change them. Don't carry on doing the same old thing expecting a different result. That's insanity. So there's where the pending order goes in. So I've had all of this. I'm out of the first trade now because I got stopped out. I got my first and second. This move here is worth having. You just walk away and leave it. There's 70 pips there. First and second positions off. Trailing at the ATR. Third position only makes nickels and dimes. Who gives a rip? There's the retest. Now I'm in again. This trade's over. Taken 3 positions here. I got taken in a couple of days ago. My stop loss. I decided it was too rich to be under here, and I placed it there. There's no right or wrongs in this. You got to be comfortable with what you do. So my first profit target, where is it? Up here. Now, where do I get my next profit targets from? Let's take a look at the weekly. Wow. If we break through here and take out the high on the daily, there's another high here we have to take off to make a higher. So that'll be a good place for my second position. And remember, once your first position is off and you start protecting your trade because you know those 2 positions are at break even, you just trail it at the ATR. That's the best shot you've got at this. And then my big hairy dog, ambitious, probably dumb support and resistance area that I want to go for my third position is up here. Whether I get up here or not is totally irrelevant. If I get halfway here, I've made a lot of money by trailing at the ATR. Swiss JPY is set up. It's set up yesterday. Pending order. This is where I put it, right in here. Not going to spend a lot of time. My stop losses are, let me have a look at my trading platform. Stop losses are still where I started from, right under there. There you go. Now, if your account's small and this is too rich in terms of the amount of pips you're giving it, because you want to trade it at a 1 to 2, cut your lot size down. Learn to do 10 cents. It's nothing. If you've got a $1,000 or $2,000 account, it doesn't matter about the big stop losses because you've cut your lot size down and you're staying within your risk of your capital. What is it? You can have it at 1%, 2%, 3.5%. I would encourage you not to go more than 2 or 2.5. You know what mine is. So there you go. There's another potential trade. We're not looking at the Euro AUD or any of that stuff. There's no setup there at the moment. Euro NZ. If this is a true bottom here, and I'm looking at a weekly chart because I wanted you to see the big picture. Look at this. This looks in the big picture like this is the bottom. So the chances are when you go down to the weekly chart and you see this lovely downtrend here and you're looking for it to go shorter, especially if the New Zealand dollar continues to strengthen or show strength against the US dollar, don't fall in love with that idea. The reality is at some point this trend's going to be over. And what I'm seeing fundamentally, and I haven't got time to explain it, is that this year, I think that we're, by the end of the year, going to get out of here in the euro the money's going to come back into the euro. You listen to Draghi, the minute he starts talking about banking reform, the market is going to like that, and we could see some strength coming in the mid to long term in the euro. And if that's the case, this could be a setup for the future. Wait for the break of that trend line. Don't just be totally convinced and blinded by the fact that you think it's going lower and continuing in the trend. Yes, it could. Wait for the market to show you. But that's a potential setup. It's not there yet, but I'm loving it. And I'm watching it keenly. Okay, there's nothing here on the Euro USD as yet. The trades are over. Now, the key areas that I'm watching for this here, and I'm looking for it this week, is just simply, I want to see a break of that level again. I'm going to put it in black. Maybe we should tone it down a bit. Okay, I'm not getting in long unless I get a close above here. And look at this. If I get that, look what is setting up here. Possibly, if it in here do. But this is not a reason to take the trade. The foundation of why I take the trade is the reason. Support and resistance is the truth of the solid foundation. All I'm looking for, all you do is just put a trend line. It's already broken it, but it hasn't broken this key area of resistance, which is a ceiling for it at the moment. So I have penny orders waiting up here. Righto, let's go on to the pound. We're nearly there. I'm not going to go through all the pairs. Pound USD. Now you've heard me say that sometimes in the London and Brexit, London Open and Frankfurt Opens, some of those trades will go on. Now on my London, Frankfurt trading thing, that I'm still have the first position open. But I had a pending order here in my daily candle change trading platform account. There's the pending order. I'm now at break even. But I'm also holding on my other platform the one position from the opening candle of Frankfurt London strategy. My first and second positions are off and bang. So now I've not only got daily candle change trades that I'm in profit and can't lose, I've got a London breakout trade in profit and can't lose. There you have it. Right, let me have a look. There's New Zealand JPY is on my radar. I have pending orders waiting here. These are my trades. So the original trade was here. Got my first and second off and I got stopped out. So that trade, I don't even have the first position or the third position open on. I wait and I get back in again because here's a shelf. Here's the top of the shelf. Not that, that was a fakie. And so we're in again. This time I've managed to hang on to my third position from this one. So I had first and second off. And then I did not want to take this here again. Why? Simply because we're at a real key resistance area. And with the yen pairs, the big numbers are really important for some reason. So my rules are that if I'm near a resistance area where it's around a big number, before I add to any other trade, I have to see the close, the retest. Now I have pending all the way. That's a wrap, guys. I hope this has been helpful. I mean, if, any strategy you use, they all work some of the time, but you have to find what is consistent in all the different market conditions. What I found, for what it might be worth, is that support and resistance is the key ingredient to build a strong foundation of a successful trading business. if you understand it right. That's what I've tried to portray today in sharing with you my portfolio around daily candle change and giving you some great potential new trades that they could fire in the next 24 hours or 48 hours before the end of the week. So take care. God bless you. Stay safe out there. Wash your hands. Wear your mask. Keep your distance. Trade well. That means protect your capital. Continue to have strict financial management around your trading. Don't be tempted to chase the market. Please don't break the rules and promises you've made to yourself. We'll see you in the chat room. And again, if you want to contact me and you're interested in getting into the chat room, not my trading room, then here is the email address that you can contact me on. FX Success at outlook.com. Go get it. Cheers.